Creamer Media's Mining Weekly Online is talking to Waheed Sulaiman, the CEO of Wescoal, a company listed on the Johannesburg Stock Exchange. Waheed, can you give us an update on what the coal industry is like at the moment?
Hi Martin, thanks for having me. It's tough out there. Mining is not in the best place in South Africa. Market conditions are difficult, and coal mining itself has got its own particular challenges. As we know, some of the perceptions in the media, articles about it being a dirty fuel source, issues around carbon emissions and the like. So coal mining is difficult. It's challenging as well also, but it's also, I think, it's a good business to be in. We're doing quite well in it, in our particular area, how we're operating. So within the larger, challenging conditions, we found our space. And we found where we can be successful in operating and looking at expanding and growing as well also. So I'm excited about the coal industry. Everything's got its challenges, but with challenges come great opportunities as well also.
And what is the output? How much coal do you produce a year, and who are the off-takers of that coal?
Sure, so we're aiming to produce about 3 million tonnes a year of ROM this year. That's mineable product. And our main targets, our main customers are Eskom. We supply approximately 80% of our coal to Eskom. Going forward, though, we do want to look at exporting more coal. So we're going to get into the export market, and we're looking to export approximately 1 million tonnes a year of coal. Maybe looking a bit further ahead into maybe the next 5, 6, 7, 8 years or so, our target will be to ramp up ROM production to 8 million tonnes a year. So we're looking at growing aggressively in the medium term.
And what mines, how many mines have you got, and what is the output from the various mines?
So Elandsspruit mine is our flagship mine. Elandsspruit will produce approximately 2 million tonnes a year of coal. Then we've got our Intubani mine and Khanyisa mine. Intubani and Khanyisa combined should produce roughly 1 million tonnes a year of coal, if not a bit more. And where we are in terms of production at those mines, Elandsspruit is fully operational. It's producing already on a continuous basis. Our Intubani mine is ramping up, and it's producing a smaller amount of coal, let's say 50,000 tonnes a month of coal. Khanyisa mine is on care and maintenance at the moment, and we're waiting for some standard regulatory approvals from the DMR before we start mining at Khanyisa.
And you invested something like 200 million rand in the Elandsspruit project. Is that something that you will now go into a phase of getting the benefit from, or have you got more projects on the go?
Elandsspruit, I think, is already delivered on the initial investment, and going forward it's going to deliver multiples and multiples of the initial investment. So we've been very pleased with the outcome of that particular project, and the 200 million or so that we've spent there, money well worth spent, I think. Going forward at Elandsspruit itself, no new planned projects there, unless we're going to double production, for example, which would mean a new box cut, and that's new capital. We could increase production without too much difficulties at Elandsspruit mine due to the great quality of the resource.
And how difficult is it in this climate to raise capital?
It's challenging, Martin. It's really, really difficult. I mean, the risk appetite for banks and funders in general is pretty low, especially when it comes to mining and in coal mining as well. So many of your sort of traditional sources of raising money, those have been cut off just on principle, because the funders have made a principled decision not to invest in coal, for example. So it's challenging. And I think we've had some success last year where we've raised approximately 50 million rand from shareholders and from the market, but that was equity coming into the business. We are looking at raising debt funding as well also, and that's process as well, speaking to businesses out there, to banks and the like. What many of them really do want to have is a long-term contract against which they would lend against, and that really is one of the areas where, as Wescoal right now, we do need to focus on delivering on.
And we see Wescoal as an aspirant to be a black-controlled holding company. What is the BEE situation with Wescoal at the moment?
Yeah, so last year, around about June last year, we were 30% black-owned business, well more than the 26% required by the DMR. At this point in time, we're just over 40% black-owned, so we've made great progress over the past year. And for sure, we know that we will become a black-controlled business. The target is to become well more than 50% black-owned as a company.
And the export side of it, one can't just walk into exports. Where will you export? Will it be via the Richards Bay Coal Terminal, or will it be via Durban? Will it be via Maputo?
Yeah.
What are you planning?
We're looking at all of those options. So right now, what we're doing is we're conducting a number of studies and figuring out which export terminal you are going to use, as you mentioned, either Richards Bay, Durban or Maputo. What makes sense to Wescoal given where our mines are and where the rail sidings are. And then the other part of that is where's the coal going to be going to also, and what's the qualities of the coal that we produce as a company, and which export destinations are suited to that. So there's a lot of work being done in that space right now, and we may partner with other people who have got expertise in that area as we go along, so that we want to grow, but we want to grow carefully. Wescoal's not a really big business right now, so we can't afford to make mistakes. And I think we've done a great job in the past by not making mistakes and growing. And we need to continue doing that to become a sustainable business, to not to sort of take the next jump too far or bite off too much, just so that you grow sustainably.
You say that 80% goes to Eskom. Where does the other 20% go?
The other 20% goes into the domestic market. It also goes to other producers. Some producers require coal to either meet their contractual obligations, or perhaps they want to blend up the quality of their coal. So the other 20% is split into the domestic market.
And can we talk prices? What prices are being fetched at the moment?
Prices with Eskom are confidential, so unable to speak about that. I think what I can say is that we're comfortable with the prices we're receiving from Eskom. We're making good money out of that. We think that it's a fair price both to Wescoal and to Eskom. I understand Eskom's challenges around managing costs, and those costs which flow down into the general public in South Africa. So those are real challenges there. So we appreciate that. We're comfortable with the returns we're making as a business. Export prices, those prices, those are published, so we can track those. Those have been trending down significantly from where they were about 4 or 5 years ago. But what we've noticed over the past few months is that maybe we've bottomed out. I hope. But it does appear that way. And prices may be ticking up, which is encouraging for people who do want to export. The other benefit which a company like Wescoal does have is that since we are a rand reporting company, as the exchange rate weakens, that also has a positive impact on our returns.
And we always thought of Wescoal not only as a producer of coal, as a miner of coal, but also as a marketer of coal, also in the trading situation. How buoyant is that trading business of yours?
It's doing well. I mean, if you go back into our past, the trading company has always been consistent. It's hit its budget, it's hit its numbers, large revenues, and those revenues have been what's funded Elandsbreit mine. So I'm not sneezing at the trading company by any means. It's done really, really well. The conditions have been difficult, though. The trading company is exposed to the general business environment out there. So when smaller companies where they supply coal to your groups that have boilers or furnaces, so it's your brick manufacturer, your fruit grower, smaller businesses out there, when they struggle because they can't repay their debt, or maybe they've got challenging issues in the macro environment, they ask for less coal from Wescoal, or they say, please give us price reductions. So your challenge there is really margin creep, a lot of that happening, and business interruption from our customers, which flows back into our business as well also. So what we're focusing on in that business is just managing the quality of our customers. I'd much rather have a smaller group of customers, really good credit ratings, and people who can survive difficult business conditions, so that when we partner with them, we'll manage through the bad times, and when things get better, we'll do really well together.
And just looking at the international market, the offshore market, the seaborne market versus the domestic market, is there still a big price differential? I mean, what are the inland prices like when one compares them to the export?
That differential is gone now, as far as I can see. Materially, I wouldn't say there's a massive differential anymore. Even if one were to look at the sort of price ranges that you'd get from Eskom as well also, it's not such a big difference anymore. In the past, I think when you're looking at coal prices of $100 a ton, there was a massive differential then. but the incentive now to export, it's not that high. So the differential has come down significantly.
But you're looking long?
We're looking long term, and it's also, as I mentioned before, if you are a RAND reporting company, you do get the benefit of a weakening exchange rate. So it's probably a combination of both. I think what we're seeing is export pricing coming down a bit, but inland and domestic pricing also ticking up, and that's a function just of, if you need to buy more coal domestically and you need to have mines starting up, the price is going to go up.
And you've been in the hot seat as CEO for just over a year now. What is your strategy? What is your vision?
So I think we're a business that wants to grow conservatively, sustainably, and develop and grow into a great business going forward, a business that is black owned, a business that shows that we can operate successfully, generate good returns for our shareholders, and be an asset to the community and to the stakeholders around us, and to have a positive impact on society. That's really where we want to go to as a company. And we believe coal mining has got a place in the future in South Africa. We require energy as a country. Coal is a cheap source of energy, and we want to play a positive role in that space going forward.
And are you acquisitive?
Absolutely. So if we are going to look to achieve our 8 million tonnes a year product from our mines, for sure we do need to acquire additional resources. We can't supply that from our existing operations. These acquisitions could either be resources, so projects or mines, or they could be corporate activities as well also. So we are considering that as well. We've got a few potential targets we're considering as well. So for sure, we are acquisitive.
And are the opportunities looking good? I mean, is there low-hanging fruit?
There are some, but not as many as what I would have expected. So price expectations haven't adjusted with market conditions yet. So we're not going to go out and acquire or buy something for the sake of doing it. It always has to add value to the business and be value accretive.
That was Waheed Sulaiman, the CEO of Wescoal, speaking to Mining Weekly Online.